Hello. So today has been a pretty interesting trading day. I'm going to share all that happened today. So I finished off yesterday with a $65 profit. Could have been more, should have been more, but you just have to work with what you have. Okay. So let's forget about yesterday's business and focus on today. I started off the day with $150, 1.5% in profit. So I did a 1% risk. That's these two right here, the 53 and the 44. And that was a losing trade. It was right here. As you can see, the only problem was entering. Wait, how does this work? Okay, I'll just use a rectangle. The only problem was entering a bit too early because, as you can see, price did drop afterwards. So that was a bit of a bummer. And I'll share all the analysis afterwards. I'll do all the analysis on TradingView afterwards, and then show exactly what happened. So this was the first one. The second one was right in here. Took another loss down here. I'll explain why that was so. And then this is the most painful one of all, a break-even trade. It just happened, and now I know why it happened. So you probably look at me and think, this guy must be very stupid. How can he get all this profit and just sit back and watch price wipe all of it out and come back to break even? It was a mistake on my part, and it's not what you think. So I trade ICT concepts, and this was something I actually learned from ICT yesterday, but I forgot to apply it. I guess experience is what teaches best, and um, the intention was good. It's just I did it at the wrong time. So one important part of trading psychology is learning how to hold on to. I'm sorry about the explosions. That's just all during weddings. Learning how to hold on to a trade till it hits your take profit level, or take it nothing at all. It takes a lot of discipline to do that. That was the intention. Except if I had put in a teeny tiny bit of brain work and remembered what I learned yesterday, I could have easily taken profit down here. Or perhaps even somewhere down here. This was the profit target. I didn't even go for the low of the day. I just wanted to target these lows. Now we could eventually come take these lows, and when I explain the technical side of these trades, I'll share exactly why this whole thing happened, this whole business here, why it all happened. So now I'm just gonna go to TradingView and share the first trade and all the analysis I did with that. Okay, so I'm not gonna bother go to the daily time frame because I only use that to frame daily buys, and I had a bearish daily buys. Now we're yet to see if that actually pans out, but it doesn't matter. You don't have to necessarily get the daily buys correct to get winning trades. So the first thing I want to draw attention to is this right here. We had a fair value gap here, so this could have been an entry opportunity. I'll use the replay button to show exactly how this all panned out. So basically, normally, as usual, I'd just wait for price to take liquidity. There's this small low here, and that's what didn't really attract me. But then price taking out this low, sell side at that low, into this fair value gap could have been an entry opportunity. I just didn't care much for it because we had all these imbalances left here. So the thing I was waiting for was for price to come all the way here into these fair value gaps after taking out the high of the day. Okay, so one thing I have to point out is this line here, this indicator just shows me the midnight open price. I'm so sorry about the explosions again. The midnight open price, which is all based on New York time. So all ICT traders do this thing where it's much easier to follow the lectures if you do everything in New York time. So this 8:30 here as you can see here, that's New York time, and this midnight is New York midnight time, which is the time I've woken up. So trading the London session is pretty convenient for me. Okay, so this is what happened. We took out the high of the day, which I think I have to put up here. So this is the high of the day. Normally I denote as HOD. Make this 10. Okay. So we took out the high of the day, and we went into the fair value gap. So as you'd expect, I went to the 1 minute time frame to look for a market structure shift, and that was pretty easy. I look for a market structure shift with displacement. So this swing low being here on the 1 minute time frame meant that this right here was a market structure shift. And as you can see, we had a pretty energetic displacement. So that was it. My fair value gap was right in here. I chose this fair value gap instead. I know there's another small one above, but I didn't really care much for that. I chose that fair value gap, and I covered the upper fair value gap as ICT suggested. So my stop loss is above here. Of course, uh, I was thinking about spread as well. Profit target. I mean, this was a losing trade, so it doesn't really matter. But you know, basically, this is what happened. Price went all the way up, picked up my order, and then it just failed. So, but this is what happened afterwards that I think it's interesting. We took out this high, and then I can delete this, by the way. We take out that high back into the 15-minute point of interest, and then another displacement. We leave a fair value gap. So I'll just merge these two fair value gaps into one right here. Now, I could have made a second entry. I just didn't feel very comfortable about it. The first reason is it was already 5. I told myself I'm going to execute trades if it's after 5. If it's I'm not going to take trades if it's after 5:30. In all New York time, by the way. So, I could have still executed. I just didn't feel very confident. And the reason is, if you look at the 15-minute time frame, you look at this whole move from the top to the bottom. You use the flip tool, drag it all the way in here, and you can see the 50% of that. Oh wait, trying to find 50% of the 50% fib level. As usual, I'll just put a horizontal array and delete the fib tool because it's a bit too messy. Change this to gold for a little bit of exactly. Alright, so I knew that I'd feel more comfortable if I was taking a trade above the 50 fib level, because there's a fair value gap here, there's another fair value gap here, there's a breaker here. So all of that, actually this would have been the best place to actually make a trade. Let me change the color to blue. There we go. So that would have been the best place to take a trade. Above discount, above the 50 fib level, which is a premium market, also at the breaker, and also there's a fair value gap right there. So that would have been a perfect place to make an execution. So I didn't want to rush into this trade right here, but it turned out that that would have actually been the move I was anticipating. So I was tricked into this trade when this was the actual move, and I'll show you what that looks like. So short position. If I had to make an execution, this is what it looked like. Short position, my profit target. Where would I put a profit target? I mean, it was already 5, so I was just watching, but a 2RR would have been pretty appropriate, in my opinion, to like 2RR. Price picks up the order right there. Or does it? No, not yet. Okay, right there. Oh, made a mistake. It's just these things. Okay, so it drops like that, and as you can see, it sold off pretty nicely, even way past the 2 hour I was waiting for. So after all of that, oh, how do I get rid of this? That's very annoying. Okay, I'll just go in the 15-minute time frame, get rid of the. Okay, there we go. It's gone. All right. I found a bit of interesting business on the 5-minute time frame that I'll share later, just not now, because I knew that this buy move was going to happen, and it did. That was a bit of it was a bit of what do you call that? It was a bit of an experiment that I was trying to do based on my old strategy, because my old strategy is also smart money concepts. I was trying to use the knowledge I had before with the knowledge I have now to see if I could apply, mesh them together, and if it would pan out, and it did. So that was really nice. But the whole time, I'll delete this because it's no longer the high of the day. I'm sorry about this line here. I'll point with the edit. It's just, it's not supposed to be there. I can just get rid of it by hiding that line right there. But I like when the London, the midnight open price is just there, right there. So that's the 8:30 open price. You see, at this point, we're above the 8:30 open price. We're above the midnight open price. And this is where I took the second loss. All right. So while studying my business, oops, that's just the alert. I don't know what's on the S&P 500, but I'm not gonna engage. I think I've had enough trading for today. Okay, so while doing all the studies, the experimentation, I noticed that there was accumulation of liquidity up here, and that was pretty prominent to me because at this point, I wasn't even thinking about price having the possibility of taking out the newly formed high of the day here into a premium market before selling off, if it's going to actually sell off. So my entire focus was in here, looking at this fair value gap right in here. So this is around 8:30. Look at what they did. Price just came in there 8:15. I mean, I think it was around almost 8:30, right? So price comes in there, and then what would you expect? It does a market structure shift again, leaves a fair value gap, and I engage. Not thinking about the possibility of price going all the way up there to, take out the high of the day. So this is what happened. Picked up my order and then failed. So that was the second loss right there. So that was a bit of a bummer. But now my whole attention just came to it was like a light bulb moment, like, oh wait, there's a chance we took out the high of the day and then, back up into a premium market. Maybe price makes contact with the breaker into the fair value gap that I'm looking at all the way up here, and that would be wonderful. That would be a very reasonable, well, logical trade to take. So that was the new thought process. So I wait patiently, and price gets in there. Oh, that was a bit too fast. Okay, I waited patiently. Price gets in there. I go in the 1 minute time frame, and I'm waiting for a market structure shift. So not yet, and there we have it. That's a market structure shift. They left this fair value gap, and so I engaged. At this point, I was only risking 0.5% because I was already down by 1.5%. So my account is back to $10,000, and the profit target should have been here for a 3.84 hour. Maybe stretch it out a little bit to get a 4 hour. That should have been the profit target. Why? Because of time. So ICT said this.
That time frame, 10 to 11, that's London close. So if you're looking for directional plays and you're in a trade, you want to have about 80% of your trade off between 10 o'clock and 11 o'clock in the morning. Because usually, not all the time, but usually that's when it creates the opposing end of the daily range. So if it's creating the high of the session here, the low is likely to form between 10 o'clock and 11 o'clock.
Okay, so because of this thing that ICT said, I'm so sorry about the noise, but I actually watched the episode 40 of the ICT mentorship. I had left the last two episodes. I hadn't watched it yet because I was working on my model after studying the other 39 the watching the other 39 episodes. But that was a valuable piece of information that I picked up yesterday. I even wrote it down. But I guess nothing teaches better than experience because I completely forgot to look at the time when price was going in my favor. You know, when you're in a profitable trade, it can get a bit you know, emotional. So price dropped massively and very, very fast. You can see it just drops like that. So it picks up the order there and then just drops like that. And that should have been the profit target. However, my profit target was down here. Now you might call it greed, but I don't really call it greed because I wasn't even targeting the sell side liquidity at the low of the day. I wasn't. All I wanted to was to just catch the catch these lows down here, and then I'm done for like a 5 risk reward ratio. That was all I wanted. And the idea was to hold till TP or nothing. That was what I was going for because yesterday I closed the trade at $65 because I made emotional decisions and closed at the wrong time. I mean, it wasn't exactly emotional decisions, it was pretty logical, but if I had put less emotions in it and more logic, I would have seen why closing at the time I did was a bad idea. So you can see right here that price just dropped. It got to this point and then it started reversing. When it started reversing, I had a couple of ideas, but none of them were right. I thought price would respect this order block. It didn't. You can see all the multiple fair value gaps up there. Price didn't respect any of them. It went all the way up, came down a little bit, gave me a bit of hope, then came all the way up. Oh no. And hit my stop loss at break even. So it came back to the entry and then, started consolidating. And that's where we are right now. So it was a very painful experience, I'm not gonna lie, because seeing price, I was back to $10,000. Even though I wasn't able to risk exactly $50 because I had to adjust for spread, I did something like $47. I got up to $200 and I still didn't close because I was trying to be disciplined. So the intention was good. The logic behind it, however, was very, very wrong. And if I had remembered what ICT taught, I would have closed the trade. I'm not very good at closing partials because I don't know. I just For me it's just I close everything or I just, accept the consequences. And these are some of the things that can happen. Now the implications of this can be massive because if the next trade is a win and it gives me a 7 RR, I always have at the back of my mind that I could have been at 9%, And if the next trade is a loss and I go into drawdown, I always know that I could have been in profit if only I'd closed this trade. But nothing is more valuable than the experience I've had and the lessons I've learned from all these mishaps. These are free trial accounts. These are demo accounts. So the fact that I'm taking them as serious is good to me. It's good for me. So there's a lot of learning value in all of these, and yeah, I've learned a lot from today's trading. So this is what it looks like on MT4. 1, 2, and 3. All the trades right here. The first one. This is the second move that I perhaps should have made a re-entry. I don't regret not making a re-entry. This is the second trade which I took a loss on, which is also pretty logical. Right here. This one right here. That's awkward. Let me delete this. Oh, come on. Okay. And this is the third trade which I definitely should have taken something on, taken profit on. So yeah, that's all the business for today. Catch you guys in the next one. Peace.